Hello traders and welcome to the Trading Fanatic channel. It's Iliya here, and as always I'm super glad to have you. Here we are with another trades breakdown video on Euro NZD, a trade that I took today, actually a few hours ago, that hit take profit. But the aim of this video is not just to break down my trades, because it doesn't make sense just to show you, okay, I took this trade from here, it hit take profit, maybe show you MT4, pips, profits, whatever you like to see. But this is what everyone does, and I really want a bit different. So I want to show you my thought process on it. What kind of factors do I consider? What can you extract from my analysis that you can implement into yours? And this will be valuable for you and for your trading career, right? So I really hope you appreciate that. I'm gonna break down two more pairs, which are all NZD based, and I'm gonna try to explain why I decided to take Euro NZD, except from Aussie NZD and NZD USD. So if you're new to the channel as well, it's all about trading. I share weekly analysis, I share educational content, trades breakdown, more videos on psychology are upcoming, so make sure to subscribe. Hit the notification bell in order not to miss the upcoming content. And if you already did, let's dive in the video. Alright, let's have a look at Euro NZD. So starting from the 4-hourly time frame, guys, when you just look at the market, what is the market doing, right? Nobody will say it's pushing down, it's just pushing up, and that is very clear. So by the time I was looking at the market, this candle just closed. So this candle closed at 7 a.m. my time. I'm UTC +2. So what I was looking at right here and what made me worry is that we're kind of approaching the highs right here. You see this huge wick, but this wick has to get filled, at least 50%. And when I saw this candle close, I dropped to the hourly time frame, and the hourly time frame was looking very good. So you can see that massive engulfing candle breaking the downtrend on the left. So basically we have this little downtrend and then a massive impulsive push to the upside. So what can we do after such a push? Then we can wait for the correction, right? So you can have multiple confluences of the correction as well. You can draw your Fibonacci, which was the 38.2 and 50% pocket. So I'm not a Fibonacci fan, and I actually got a little comment the other day that I'm just using Fibonacci very inconsistently, and that is very true because I don't use Fibonacci for the corrections. Like, I'm not telling myself, all right, I'm always gonna be waiting for 61.8 or 50% or this. I just draw them for some further confluence because what I try to look for is for at least a 38.2, right? Because if the market stopped right here, then this is too high for me. Like, I wanted to retrace at least to one Fibonacci level, because if I plot the 20 something Fib, yes, it would be tapped, but yeah, this is just stupid. I want to see price flow a little bit down, and seeing the price into the 38.2 and 50% pocket was perfectly fine for me. So what you can do next, you can mark the extension for a potential take profit. But I not always take this extension, especially in this market that was extremely extended, right? So what do we have on the hourly time frame right here, guys? So you can see how the market was failing to break on numerous occasions this very structure. If I catch all the wicks, so I basically try to catch all the wicks, this and this, we form a very strong resistance level right here. And if I drop on the 15 minutes, you're gonna see the consolidation, the market trying, leaving those wicks, trying to break above, failing, but failing to break below as well, which was another very good confidence for me that the market is failing to break below. And later what I saw is this very strong bullish engulf to close above. And that's when I said, all right, we're shifting, we closed above. Like, even on that week, if you have a look at the high of this week, we closed above. So I said, all right, we are ready for longs. What do I have to do later is just drop to the 15-minute time frame and have a look at the structure that we just drew exactly right here. So what I did, I waited for the market to come right here. I set my order. You can instant execution as well. Stop loss, I placed it, I believe something like this, 19 or 20 pips. Yeah, let's do 20 to be conservative. Why 20? So you can place it right here. You can place it right here as well, and you can place it below right here. So right here, looked a little bit too aggressive for me because the market can just pull back to create an equal higher low. So I thought, okay, let's place it a little bit lower so I can be fine. And then we enter the trade. It was consolidated right here, trying to push up, trying to push down, and NU actually by that time was really manipulative. So I'm gonna show you on NU later. And what I did on this one is actually I took my take profits at this sort of area. So what I do is I just do a reverse flip, that's what it's called, and then you can have an area for take profits. And if you have a look, we have this area. So when the market gets into that area, you can take your profit, which was a beautiful 3-hour trade. So this is Euro NZD. As you can see, simple, but there is still a lot of stuff going behind this. other confluences that I'm not going to be shared, and they will all be shared in my private community that is upcoming. So make sure to stay tuned. So this is EUR NZD. Very simple again, guys. If you just simplify it, simple break, retest, introduction of momentum, stop loss below structure, new structure introduced, higher low formation going for the higher high. Of course, you have to take profit, and as I said, I didn't want to ride it for too long, and after it created that higher high, then I would definitely take my profits, which was perfectly fine. So this is EUR NZD. Let's have a look at two other pairs that actually develop in a similar way, but see what was wrong with them. NZD USD 4 hourly time frame. This is a pair that I shared this morning as well. So this was looking very good. So when you zoom in, what we see, guys, is a nice push to the downside. We have a very strong supportive level right here that we waited for it to break. And actually from the weekly outlook and setups, I had this big consolidation. And I was expecting the market to pull back around this area, which it actually did, to create a lower high and to break below. So we had the break below, right? But we have just one candle of breakout, and the next one creates a huge wick to the downside, indicating a lot of bullish pressure. And if you just zoom out a little bit, you can see on the left that we have tons of support right here, and the market just tapped into that area, right? So, however, if we just focus on most recent price action, we have a break and a retest right here. Lower low, broken. This support, turns resistance from the other side, and we have a few rejections right here. So perfectly safe to be looking for an entry. As you can see, the hourly time frame provided us with a nice push to the downside, so we can wait for the correction. What can we do? Again, I can drop a little fib. And what you can see, guys, is that the market came very close to the 78.6, and the 78.6 is my last resort. And when I see price pulling back that high, I usually don't want to take a trade. Like some people only trade from a 78.6, which is perfectly fine if it works for them. But when I see the market pull back that much, then I don't want to be taking a trade, right? So what happens on the hourly time frame that I don't like is this was the perfect opportunity right here, when the market started to slow down, but it failed to break below. And then we have this bullish engulf, strong above, which could be manipulation. Then the market fails to continue, falls back below, but still fails to break that big hourly supportive level. As you can see, if we catch all the wicks, something like this, fails to break. Then we have this strong push to the upside. Then again, massive engulfing candle. And right here, actually, I believe it was the entry. So if I go to the 15-minute, no, actually the entry was exactly before, around here. So I think the chart got a little bit confused. But if I remove that area right here, you're gonna see this push, nice breakout to the downside, and a pullback into this area right here. If I catch all the wicks, here it is. So you can place your order right here. Stop loss, I spoke about two stop losses. The first one was 9 pips above this wick, and the other one was 11 pips above that one. So you can see if we took the conservative, we wouldn't have been stopped out. And potentially, yes, we can target the lows right here into this supportive level. But what was wrong with that one is you can see the hourly time frame, like it never closed above, below. And that area that I just deleted, it actually acted as beautiful support. So you can see we push down, big wick, then massive push up from the support. Then we try to break, but we're still into that support, and you can see when the market tries to push down, it creates a huge wick and still fails to break. So what I didn't like on that one is that there were too many bullish signs, like this big supportive level, this huge wick right here, the hourly time frame failing to break below. During the time of the entry, it failed. So after this bearish engulf, yes, of course, you can try to get a trade after the bearish engulf, maybe on an aggressive retest of that area, but this is too aggressive for me, for example, to take a trade like this. And as you can see, we're back at the entry, and we're actually in a consolidation box. Right, so I really hope you extracted something from it. Just have a look how everything is built up from a 4 hourly time frame. Where is the market doing? What are some potential areas that it might find trouble? What is the hourly time frame doing? Is it strong? Is it weak? What is the structure? Is it breaking structure? Because if you have a look on this trade, have a look how we emerged above the structure right here. But on this one, we never did. All right, so this is NZD USD, a trade that I did not take. I had some people from the community taking it. It's still playing out, so I really hope that pushes down, but overall, not a very high probability trade. And the last pair that we're gonna have a look at is Aussie NZD. So you see there were like all NZD pairs, and I'm gonna break down what was actually wrong with them. So this one starting from a 4 hourly time frame, what is the market doing? It's clearly pushing to the upside, but it's pushing in the more longer waves, because you can see after a wave, we have a big like consolidation, and after a wave we have again a big downtrend actually that you can take multiple shorts on the way down, and then after a push we again have this consolidation. So just seeing how the market behaves, we can expect that this one is going to continue to the upside. What I can see right here is that the market failed to break below, creating a double bottom, which is beautiful to see. A nice push to the upside, but there was this level right here that really worried me. So by the time I was looking at the market, it was after this candle, the 3 a.m. candle that closes at 7. So this candle was already closed. And when I dropped to the hourly time frame, what did we have, guys? Again, the market massively impulsing to the upside, creating a little complex correction, right? So when you have a complex correction, there is definitely like you have to always look for some bullish signs, because you don't know if this is not going to be turn into a break and retest for a continuation down. But then we had this massive impulsive candle to the upside, and I was like, all right, this looks good. However, strong bullish candle into structure right here, into strong support, creating a double top, and tapping into that area didn't look too good to me. So this is what stopped me from that trade. And I already had my order set on Euro NZD. But as you can see again, right here, what do we have? A little downtrend. The market breaks the downtrend, little consolidation. The market breaks the consolidation, and we come back for a retest. Exactly right here on the retest of that structure on the left, which is just right here. You can take your trade, which was actually 0 drawdown trade. Stop loss, potentially you can place it below right here just to be safe, and take profit. You can measure the take profit however you want. Maybe you can take the extension, maybe you can take like something else, but as you can see, this was hit, and it was a very quick 1 to 2, which is not very nice, but overall it hit take profits, right? So this was very quick, but as you can see, again, the same process. Full hourly time frame, what's the market doing? Hourly time frame, where we can find trouble. Where is the market on the hourly time frame as well? Is it breaking structure? Is it trending down? As you can see on this occasion, we couldn't have taken a trade from the downside. Yes, of course we can, because there are strategies for that, but this is not how I trade. So I had to wait for the push, for the correction, for the new push to introduce a bullish trend, and then potentially try to take it from here. But I was already in a Euro NZD, and this was already tapping this very strong support, resistance. Doesn't matter, support and resistance all the same. So I just didn't like to take that trade. And this is for today, guys. Very quick breakdown. Please let me know if you appreciate those videos. I will be doing more of them, like just to break down my thought process. We'll try to give you a little bit of an advice of what you can potentially look at. So thank you again for staying up until now. I really hope you appreciate the video. Make sure to leave me some feedback, like the video to support the channel, and I cannot wait to see you on my next video, and I wish you a crushing week.